Hello everyone and welcome to Economic Impact. Today is May 14, 2024 and I am with our Chief Economist, Stéfane Marion. Hello Stéfane.
Good morning, Denis.
How are you today?
I'm good.
Good. Once again, we're going to talk about performance on the stock market.
Yeah, it wasn't a very good month in April, as you recall. We spoke to that last month, but so far this month we've regained some of the lost ground and global equities are slightly up on the quarter, Denis. Still comfortably up year to date, but on the quarter, we've regained the ground lost in April. Note that Canada is actually outperforming by a little bit the global index, so that's a bit of a change.
Is it widespread in Canada or is it only very few sectors?
No, it's quite narrow, Denis. It's mostly a reflection of what's happening in materials, gold prices, mining stocks, and also the energy sector up 3.7% in the quarter. Note that year to date, materials up almost 18%, almost 16% for energy. Were it not for these two sectors, we wouldn't have a positive return year to date on the S&P TSX, so it's still narrow.
But it's because of expectation on rates, and rates seems to reaching a plateau right now.
Well, I think the reason the market has been expected, has done well year to date is a reflection of expectations that central banks are done with monetary tightening. You can see that in emerging markets. I mean, some countries have actually slightly lowered interest rates. As for the advanced economies, we saw Sweden coming down with rates. Europe's about to start, but the big question is what will happen in the U.S. in the second half this year. This is what the stock market is looking at right now.
Yeah, but when we're talking about rates in North America, we're talking about inflation. But inflation has to come down to see rates coming down. But it's not right now. Not in the state.
Not collaborating, not so far. This is CPI week this year, but if this week is CPI week, but if you look at the PCE deflator, which is the Fed's preferred measure of inflation, we have 3 consecutive months where the monthly change in inflation annualizes well above the 2% Fed target. The last reading we had was close to 4%, so clearly this is not a Fed-friendly number.
And, it's all due because of labor market, once again.
Well, I mean, if inflation does not collaborate, then you got to look at what's happening in wages, and clearly that's not helping either. And labor compensation is actually accelerating on the quarter. This is what's happening when you deploy massive fiscal stimulus with on an unemployment rate below 4%. So at 4.8%, Denis, this is not Fed friendly either. And so I'm not saying that the Fed won't be cutting rates this year, but I think it's going to be at the very end of this year. So rate cuts are coming, but maybe not as aggressively as we thought. So hence, from a stock market perspective, you might limit some of the upside.
Yeah, and if we're coming back in Canada, we just had the employment numbers. Still a good number.
90,000 jobs created in April, and that's almost 5 times above expectations. But you know what, Denis? The unemployment rate did not come down. So the door is still open for Bank of Canada rate cuts. And the reason the unemployment rate did not come down is that unlike expectations, population growth is actually accelerating so far in 2024. So note that historically, over the first 4 months of the year, normally population grows 110,000. Last year was 280,000 on the first 4 months, which was an all-time record high. But you know what? New record this year. We're actually up 47% above the all-time high recorded last year. More than 400,000 individuals, Denis. That is a new record, all-time record. This is unprecedented.
Are you predicting a new record this year in terms of population growth once again?
Well, to be honest,
it's been 2 years in a row now.
Yeah, I know. To be honest, I thought that we might decelerate this year, but based on these numbers, you're likely to accelerate. And the reason for that, Denis, is Ottawa has warned people that starting in 2025, there will be some limits on foreign students and temporary workers. So some people have probably front-loaded their decisions to come to Canada. So it's likely to be a new record in terms of population growth again this year.
And when we're talking about inflation, rent inflation, it's also a big part of that huge number that we have.
Remember what we said in the past. If you quote David Foote, the most famous Canadian demographer, he once said demographics explain 2/3 of everything. So when you have this type of demographic shock, you shouldn't be surprised to see rent inflation moving higher. So Canada-wide, we're at 8.5%, which is the highest level since 1980. In provinces such as Alberta, where population growth is the fastest in the world, we're talking about rent inflation at 14%. So at 8.5%, you have limited downside. So what that means, it keeps inflation slightly elevated versus expectations. So it doesn't mean that the Bank of Canada won't be able to cut rates. I think they will be able to cut rates, but it won't be as aggressive as what we've seen in the past. So you have to be prepared for rate cuts, but not massive rate cuts.
Yeah, thank you. Last month, you start talking about electricity consumption in the U.S. If we do the same thing in Canada, how does it look?
Big surprise here too. So in the U.S., we know electricity demand is surging on the basis of manufacturing reshoring. From a Canadian perspective, it's not the case. It's not manufacturing reshoring. Again, it goes back to demographics explain 2/3 of everything. And with surging population, we've added 4 million people over the past 4 years. Well, we're on track to add 4 million people the past 4 years. That's what we normally do in 10 years, right? So yeah, I don't think Ottawa was ready for this type of growth or this change in trend in terms of electricity demand. So after 15 years where we outsource manufacturing production to China or the rest of Asia, manufacturing electricity demand was quite stable. We're now at an inflection point. This is surprising everyone. Every country is being surprised by this right now, this surging demand for electricity. It's population growth, but it's also massive demand from AI, right?
For sure. But at the same time, because of that, it's the first time that we're seeing deficit in electricity production in Canada.
Well, you want to see how surprised you can be when you don't plan for that, and when there's less hydroelectricity available from BC or Quebec because the water reservoirs are a little bit depleted, you end up having the first Canadian electricity deficit on record. So last winter we were forced to import electricity from the US, which is produced from natural gas and coal. So that's a big surprise. I don't think anybody expected this, and that's a big deal. So you have to be prepared for rising demand that might lead to that. So we need to add capacity here too.
Yeah, and talking about natural gas, because now Ontario need more electricity, they need more natural gas to produce that electricity,
well,
which is a big change.
Again, demographics explain 2/3 of everything. So from an Ontario perspective, think about the GTA, the Greater Toronto Area saw its population growth accelerating 66% above last year's level, which was an all-time high. So in the GTA alone, you've added 100,000 people in the first 4 months, which is unprecedented. That means there's more demand for electricity. And the electricity capacity that Ontario has at this point in time comes from natural gas, hence the reason why the natural gas electricity production from natural gas actually more than doubled over the previous year. And it's likely to remain on an uptrend, Denis, because we have even yet to start producing all these electrical vehicles that will demand a high proportion of electricity, and with population growth so strong. I think what it does, Denis, it argues for probably the need to probably push back those decarbonization objectives that have been put forward from a Canadian perspective. Again, we never thought we would get this type of demographic surge, so we need to adjust to this situation.
Thank you, Stéfane. Probably more question mark that we have in our head now than we had previously, but very interesting. And thank you all for being with us. Above all, don't miss the next meeting early June. Until then, thank you.